Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 12th of May. Starting off with the Cluff Energy, and we see this break of a falling wedge, which has been in place since, I suppose the end of December. We've also broken that line of resistance there from that time of the year as well, and the 200-day moving average. That's at 0.4 pence. An end-of-day close above 0.4 should be enough to get the shares on a journey towards as high as 0.75, which is the top of a broadening triangle from the turn of the year. Time frame on 0.75, perhaps as soon as the end of next month. Next up is Circassia, which probably wouldn't have appeared if it hadn't been quite such a quiet day. But here we've got the shares bouncing off the floor of a rising trend channel, which has been in place since October. Also a bear trap yesterday from just below the 50-day moving average at 29.5 pence, while we're above the 50-day line on an end-of-day close basis, looking towards 45 pence as soon as the end of this month. Let's see if the shares can rise to the occasion. Moving along to Carclo, which has been covered in the Bulletin Board Heroes on several occasions, just hitting that target that we had previously at the top of a rising trend channel. That was from last June and around the 70 pence mark. End of day close above today's intraday high so far at 72 pence could get the shares onto a more steeper trajectory to the upside and hitting as high as £1.10 by the end of July, let's say, allowing for a little bit of delay perhaps if we have to consolidate in the 60s for any length of time. But at the moment, above 72 up to as high as £1.10 whenever that happens. In terms of the stop loss, an end of day close back below yesterday's hammer candle at 51 pence will probably do the trick, and ideally we don't really want to close back below 60 pence anytime soon. Onto a stock which has not been doing so well, but there may be a bear trap rebound opportunity here on this current stock here, which is Logistics Development. Here we had the low at the start of last month at 10.5 pence. Yesterday we went down to 9.8 pence and bounced back quite strongly since then. The view is that while there's no end-of-day close back below that 10.5 pence floor, we could at least see progress towards the area of the 50-day moving average around the 14 pence level currently. If you're cautious on the shares and want to see more evidence of recovery, then you'd wait for a break of that resistance line there from back in February at 12.5 pence. But I suppose 12.5 pence the initial target, and after that then we could partially or even fully retest the best levels of the year towards 20 pence. But early days yet, and it's just really that bear trap opportunity that some people might find attractive. Rather more bullish situation comes in the form of Petromatt, and on this particular daily chart we've got a situation where the shares have been in a bull flag, which is basically based around the 5 pence level. That was the previous target that we had at the top of that rising trend channel from November. Current situation is that we're looking for a greater high, 8.5 pence, which is a resistance line projection from 2019, back in the autumn of that year. And that's the wider rising trend channel that we've got on the daily chart. And that could be hit as soon as the end of next month. But the upside valid at least while we're above the 5 pence level on an end of day close basis. So looking for 8.5. But actually with such an extended base for the shares, we'll probably be looking for much more from Petromatt after 8.5 pence. But at the moment, that's the initial target on the stock. One of today's best risers, at least at the moment, is Pembridge, and no, it's a stock which a lot of private investors have been looking at and dreaming of decent upside here. Current situation is that we've broken that 8 pence peak from February, and while we're above that, looking towards a line of resistance heading as high as 20 pence, that line there from February last year, and hopefully that could be hit as soon as the end of next month. So rather simple, above 8 pence, looking for 20 pence by the end of next month on Pembridge. Less high profile situation, but one which might come up with the goods over the near term is Resolute Mining. Here we've got the shares, I suppose, delivering a bear trap below that old floor there. That was around 29.5 pence back in March last year. The longer we stay above 29.5, the greater the chance of at least a move towards the top of the rising trend channel from March and the 200-day moving average at 45 pence. And the time frame on that as soon as the end of this month. A bit of a hurry, but hopefully that's what's going to happen, especially while we remain above the 50-day line, which was the support for the shares yesterday. Sanderson Design is next, and a beautiful bullish chart on this particular situation. Not exactly a very high profile stock, but a great looking broadening triangle here, and the breakout today through the April peak at £1.38, an end of day close and a weekly close above 138 could take the shares up to a best case scenario target over the next 2 to 3 months, maybe by the end of July as high as £2.40, and the upside valid at least while we hold above the 20-day moving average currently at £1.32. If we break back below that, then we might have to revise the target and the timescale, but looking very solid indeed. The broadening triangle tends to be the most bullish of formations that you can see on daily charts of small cap stocks. Onto shoezone, which I think I covered a month or so ago, but it's back again, possibly a pandemic play, I suppose. And here we've got the shares bouncing off the floor of this rising trend channel from November. Top of the channel there at £1, and that might be hit as soon as the end of next month. What we're looking for here is really an end of day close above that March resistance line around, I suppose that's the 76, 77 pence area. If we can get that over the course of this week, then £1 could be on the cards by the end of next month. Going back to Trident royalties, which was covered in the Daily Mail, I think, over the weekend, and managed to survive that as well, which is quite impressive. Inside day breakout so far today. The longer the shares remain above 40 pence or 40 pence and above, the greater the chance of a move towards the top of that broadening triangle, which has been in place since June last year at 70 pence. Time frame on that perhaps by the end of July. Upside valid while we hold above the 50-day moving average at 36 pence, and only really looking negative if we go back below the 200-day line at 33 pence, but at the moment that doesn't seem to be too likely a scenario. Just a couple of stocks to go now. First is VR Education, and couldn't resist this on the basis of the gap high that we've had today through 16 pence. The longer that we stay above 16 pence, the greater the chance of a move towards the top of that broadening triangle from basically the end of September. That's promising us a target as high as 30 pence over the next couple of months, so maybe by the end of July. And the upside valid while we hold above the area of the 50 and 200-day moving averages around 13 pence. Finishing off with the works, which is not really a frequent flyer here on the Bulletin Board Heroes, but we have it today as a rare treat, and the rare treat is provided by the way the shares have gapped up to new highs today. That suggests that we're in a nice rising trend channel, which I'm just about to draw at the moment, and that trend channel currently based around the 60 pence level. Top of the channel for the shares up to £1, and that could be hit as soon as the end of next month, especially while there's no end of day close back below the initial May resistance at 65 pence. So above 65 pence, looking at £1 for the works by the end of next month. That's it from me today. More updates tomorrow.